All right, so a lot of things are happening that's interesting right now, and starting at the top, I don't know why this is on a week, but it's supposed to be like 6 months, and this is the week. But the credit spreads, they're not looking too good. They're looking like they're rolling over. Oops. So we got a gap to fill here, and it looks like it's getting ready to drop down, and then we uh, we we tried up here and we failed to get above here. We have a gap to fill here, so it could drop on the credit spreads. This is high yield growth credit spreads. This is corporate credit spreads, and the economy runs on credit. Unfortunately, we came up here to this weekly resistance, tested it, couldn't break out, reversed to the downside. So that's one sign of weakness. And then we got oil. We broke to the upside, broke to the downside, retested, resumed down, and it's we're back at the lows. We're back at the lows, and we're about to close below support on the H4. We'll see. This is supposed to be the swing low support, but doesn't look good. Does not look good. Looks really weak, and continuing to get weaker. Uh-huh. So same thing for West Texas oil crude. Broke to the upside, broke to the downside. Let's see. Where's the one where I guess it's this one. We just broke. We just broke through the downside. West Texas oil crude for I guess a retest on the up and coming retest. Gold falling apart. Swing failure pattern right here. Swing high right there. Deviation. I knew this was trouble. I called it out. I'm like, this weekly resistance here, I'm not going in it unless we close the week above it. Other than that, it's a fake out. Like it's a bait. It's here to trap people. This is and then deviation, left shoulder, right shoulder. We broke the H4 breaker back under, I don't know what moving average is this, but 150. Retest, break to down to the downside. So gold fragility as well. It's just all fragile. Um, Tech broke down, of course. I mean, that one's easy to spot. So ExxonMobil, this is an interesting one. This is about to have a daily breaker. I basically said if ExxonMobil gets a daily breaker, then it's pretty much the party's over. Exxon oil companies were really strong in holding up the market, and now it's finally cracking under pressure. The earnings and the cheaper oil is just not showing it in the earnings. Whenever the price of gasoline was expensive, it really benefited these companies. Now that it's not so much, now it's time to take out that strength. Broke down on the Dow. Looks like we have a daily breaker to go through. It's trying to attack these lows to test the lows. Right now it's at the swing low. Could come back up. We'll see. But for right now, it doesn't look too good. And then, could be a deviation from this last week close. Breakdown below, retest, and then resume to the downside. That's what it's looked like it's about to do. And then here for the S&P 500, H4 breaker, made a video about it. Came in for the retest. Wasn't sure if it was going to go a little higher for the swing low above, or just the swing high above, or swing high right here. And it just happened to be this one right here. This gap that it's making, there's like a speed gap. Let's see, maybe if I put it here. This gap thing right here is just pure wick. I think it's going to come back into it. I'm not 100% sure. It could be a speed gap where it just like boom, 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 it just vomits. and that's totally possible. Like I don't know how it's gonna break down. I'm just trying to capture and monetize, it falling. I did capture a little bit, but that's about it. Yeah, I mean, it's really difficult. It's really slow and low volume. It's just bleeding. It's not like a crash. It's just bleeding. So it's even harder to trade something that's bleeding, just because it's just a really slow churn. And specifically, I mean, I haven't had the patience really, uh, but this is basically the slow churn right here. Maybe you get a signal, but it would pop up, and then stop hunt those people that got in, and then get a signal, stop hunt. It's very hard to trade. Um, I mean, the best way would be to find a high, and then wait for it to stop hunt it, and then enter. That would be the ideal way to do it. Here, you didn't have to wait for a high; it just kind of went up here. But it's difficult. I'll have to say that. So that's pretty much it. Now we look at the some correlative things. The VIX getting ready to finally make another round of being bullish. Um, Japanese yen, we're about to see if this is gonna close the week above. Waiting to see some strength. Euro, waiting to see some breakdown. Haven't seen anything yet, and the dollar could be breaking up to the upside. We haven't seen it yet, but the closest out of all of these is the VIX, to have an H4 breaker to the upside. For a weekly breaker, it's the Japanese yen. It's pretty close to breaking to the upside. And then I think that's about it. I did say that if we didn't get a weekly close above here, it would be in trouble. I think it's trying to test it right now. So I don't know. I don't. We might get another pump of the S&P 500 into this H4 breaker here. I don't know where we're gonna stop. Maybe at this swing high right here, and then we'll hit some of these this moving average channel, or maybe we come up to the daily or weekly. Um, maybe the daily moves down here. I don't know what happens. Maybe we go up to the weekly, and we just fill this in. I'm not sure. My guess would be we come down and then we retest out here. Um, I don't know. Maybe it goes like this, and we come up into here. Boom. That's it, and then it falls out. That's kind of just my, I've had to kind of adjust my expectation. I thought it was going to go a little higher, but because we did break this market structure um, here on this swing low, I don't think it's going to purge through this. It looks like it's going to be pretty difficult. So I just expect a lot of slow churn grind. I mean, there's not a whole lot of news, and up until it just collapses. I mean, there's nothing holding up oil really except the swing low, and then um, credit spreads are on their way to fill the gap. It's just a matter of time. And if we look at timing solutions, like this is taking the the source of timing solutions in the S&P 500, and it's saying roughly like the 7th, or today, 6th or 7th, that we're going to expect the beginning of the downturn, to the possible bottom, and then possible center rally after, and possible target of a bottom is 3,200 roughly. It's not the exact number. It's just something that I'm looking at to possibly getting in around that period. But waiting for the final uh, guillotine move of this to really play out, just because um, expecting so much from a 20% move. It's taking forever to begin that process. And I mean, it all started, with that weekly resistance, the failure to close the week above, and then we poked our head a little bit above it, came back down, and then the rest is history. So that's pretty much it. When it comes to the portfolio on the competition, we're total gain of 24%, 5% gain today. We added SRS, you know, real estate short. I think it's 3x SRS, S&P 500 real estate short, and then that's roughly down here. SRS. So it's it doesn't say, but expecting good things. Maybe a nice jump, maybe up into here or a little higher. I don't know, like 20, 30%, maybe higher. Maybe we come up into here. That would be cool. So SRS is definitely something that's that could do really well. I did UVXY, waiting for the volatility to really kick in. I could see like definitely possibly like 80%, possibly on this thing. And then drip, it's 2x bear short on oil. We're already retesting that breaker, and then possibly break to the upside, and just destroy these bears on the short side. So I mean that's pretty much it. And then we got crypto coins. So I don't know what happened to my. I got 10 positions, 238% short, 220% long. UVXY is 97% of the portfolio. Drip, 43 SRS, 40 S&P 500 short. I think that's 3x. That's either 2x or 3x short. It's 40%. And then we're 40% short roughly on all these crypto coins. Ethereum Classic, Matic, Atom, Engine, Sand. So that's pretty much it. Hoping I get first place, just because I'm expecting a big downside. You know, my portfolio is geared for this event, and I expect nothing short of 100% gain on the month. And then also involving myself in the Santa rally afterwards. But that's that. And then still working on getting into the prop firm of passing the evaluations. I'm waiting for that drop to just deliver me a Christmas gift, and then have access to a lot of prop firm money, to where I could just go low and slow, risking I think 1/4%, so 0.25% per trade, and just see if I can crack out with a trading system around 2 to 3K per contract. And I got 6 of these contracts, so we'll see how much of it survives, how much of it crosses the finish line. Obviously, I'm trying to leverage this event on a short to be able to pass this evaluation quickly. And the strategy right now is opening range breakout. And that's the thing I'm going to leverage. I'm thinking I'm going to have to ante up the contract size to leverage soon coming up more reward on the downside. With us getting so close to a possible day of reversal to the downside, I'm just looking for mainly a good resistance point to buy, to short, and a clear signal. Right now, like, it seems weak on the short side. We already did a retest, retest resumption off the H4 breaker, so like I don't know what to expect. I know we're gonna pump up again, but I'm thinking I'm gonna have to go off of maybe an hourly market structure break, or an or a 5-minute market structure break. It's a little less desirable just because these kind of signals are just more choppy, more hard to navigate, and I'm just hoping that my oscillators will help guide me of a possible top um, to short, or some kind of trails to really give me a signal to short. And then I'm just going to have a wide stop, and just see if I can get a trend day of just a really big short, a lot of distance covered, and just pass all these evaluations and just be Merry Christmas. But the real work will begin once the evaluation of the prop firm contract is passed, and then implementing the trading system to where I'm able to get the profitable months churning with a trading system, and just making it boring in a sense, just because the more boring it is, the better. So the goal is just low and slow. I mean, the risk to put to these portfolios would be a quarter of a percent, 0.25%. So the goal is just to not put the account at risk, and just to allow the kinks of the trading system just to play through, and just begin getting profit in there, and then just keep on improving the trading system, improving the trades, building positions, trailing positions, getting better at taking profit. That's mainly the goal of just those accounts, is just being able to build some kind of system to where I could just keep on adding accounts, and with each account that I add, uh, it has potential of just another replication of just the profit of that trading system at a low level, to prevent the account from being at risk of being lost. So that's pretty much it. It just seems kind of surreal that it's here. Like it looks really bad. Like the VIX is at an all-time low. Oil, there's not a whole lot stopping it from going lower. The credit spreads want to go lower to fill that gap. It just doesn't look good. And then with us bleeding out, and that rejection of where we were at, um, it just almost is a foregone conclusion we're going to drop 20%. Um, Obviously, I can't say for certain that that's the way it's going to be, but it's definitely leaning that way. And right now is like the safest kind of entry for short side for 20% reward. So that's kind of just the main deal. The bad thing is with my accounts, I can't do my contracts. I can't do swing trades, so I can't hold multiple days. It's gotta be like I gotta show up every day, and be able to capitalize on just the movement, and just keep the profits in the account and not lose it, not overtrade, um, and just make it boring. Have that discipline. Don't try to uh, bet my whole career on that day, and just nice, steady profits, and just being satisfied with what it gives me from what I've executed on. Because I'm able to get it, but then there's that desire where I'm like, oh, well, if I got it this time, I can go get it the other times. And that's just not true. The more you trade, the more you open yourself to giving that reward that you got back. And just because the quality of bias and entry is becomes more cloudy as the day goes on, compared to the high probable setup that I entered in to be able to get that, and the hard work that went into that. So that's pretty much the update. I'll give you an update on just how many of the contracts get passed. I will not disclose the amount of the contracts, just because it doesn't seem like it's like um, just in any way. It's more of just a sharing, a celebration of just, hey, I just qualified, um, past qualifications for these contracts, and it can open a lot of doors. That's just the main deal. But anyways, I'm gonna leave it there. Thanks for watching. See you in the next video.